Yeah. So we'll just wait just a couple of seconds until everybody's actually come on, but we'll kind of get started relatively quickly because we appreciate that the weather's particularly good today. So we'll try and keep it short and get everybody started. Yeah, here we'll kick off, Stephen, will we? Because
go ahead.
Okay, everybody, thank you very much for attending Toast. I think it's fourth or fifth webinar now. So what we've kind of come across is that when we're speaking to clients, it becomes kind of quite obvious that sometimes they're unsure of particular expenses that they can claim. So we decided to do a full kind of webinar on that. So this one obviously is what can I claim as a business expense and what can I not? So fairly straightforward topic, but quite important in the sense that it can be really, really useful. Sometimes it can reduce your tax bill, save money, which is always a good thing. And basically, we're trying to identify those things that may not be overly obvious. Some you might know about, some you might not. And basically, we want to try and kind of make sure everything's covered for you. So obviously a bit of an introduction. So whilst the webinar is ongoing, please feel free to ask your questions. They'll be completely private. We'll not kind of publicly post your questions or anything like that. So if you do have a question, feel free to pop it in the question and answer box. We'll do our best to get through as many as we can throughout the time, but we are trying to stick to quite a tight time schedule here. Secondly, if after the webinar, if during the webinar or whatever, you want to book a consultation, they're completely confidential again, and they're completely free. So if you just want to have a chat, you're not sure about particular things, whether you need an account, whether you don't, whatever, feel free to book a consultation. You can do that on kind of any of the social media sites that we have and anything like that. We do, we kind of cover a wide range of clients and a wide range of industries. So whether you're in the healthcare industry and retail and online and social media and whatever, we cover a broad spectrum of everybody. We have clients across all of those industries and kind of much more. So there isn't a particular area that we haven't come across, and so feel free to avail of our services for that. The other thing is, don't worry about taking notes. We'll send out recordings and slides afterwards. So, feel free to you'll get those afterwards. So feel free to just ignore having to take notes or anything like that. So move through the introduction, then I'll pass over to Stephen. He'll go through most of it, and then we'll finish off just, I'll do a bit just towards the end. So managing expenses obviously is a very important part of your business. And really, you can't, unless you have a full understanding of what you can claim, really that's how you can maximize your tax savings and your tax efficiency, and then get your net profit down, get some savings. All legally, there's no secrets here, nothing illegal, obviously. But if you can claim it, you're better to claim it and get that down and save yourself some money. So with that, Stephen, I'll pass over to you for part one. So
great. Thanks, Michael. And welcome everyone. First slide here is what are business expenses? Now, put simply, HMRC put a definition on it, and they say that a business expense is a cost that must be wholly and exclusively incurred for the purposes of the trade. So in other words, any trading expenses that you have that kind of take for the day-to-day running of your business, that would be classed as a business expense. Now, you might have heard of another definition of it, in that it's wholly, exclusively, and necessary for the purposes of the trade. but that kind of falls in line with employee expenses. So if you have employees through your business and they have expenses there, they would have to be classed as necessary for the purposes of that trade in order to be classed as a business expense. So there's two different types of definitions there. And then there's also two types of business expenses. Now you can look at these and call them tax deductible expenses or non-tax deductible expenses. It's easier for me to understand anyway if you just call them allowable expenses and disallowable expenses. And what they simply mean is that if it's an allowable expense, then it's going to be able to reduce your tax bill.
HMRC allow it.
HMRC allow it, yeah, to reduce your tax. If it's disallowable, then although you can still claim it as an expense through your business, ultimately when it comes to completing your tax return or your tax liability, it's not going to be included, and you're not going to be able to claim as a tax reducer. So it's still in there as an expense, but not as a tax reducer.
HMRC will just ignore it when they're calculating what you owe. Basically.
Yeah, in terms of the tax. So they'll ignore the disallowable ones. Now we'll go through kind of list of a number of them. A lot of them will be focused on allowable expenses because obviously that's the most important ones here and trying to reduce your tax. And then we'll touch on a few disallowable ones also, just so that you're aware of them moving forward, and you know the difference between the two.
And just on the wholly and exclusively, so it is completely for the business. It's not really related to something else.
It's not personal related, or it has to be wholly and exclusively for the trade. So if any of it's split between personal and business, then it won't be allowable as an expense in your account.
Okay.
Yeah. Now this next paragraph, it touches on larger purchases. So there might be times when you're purchasing larger items for your business. So if it's a laptop, if it's office furniture or anything like that, those are usually items that are used over a couple of years potentially in your business. So they're treated differently in that they're treated and managed as a capital allowance. And basically what capital allowances does also is a way of saving tax when your business buys an asset. So if you're buying a laptop, if you're buying anything else that's business related for that business, just keep a receipt of it, keep track of it, and then ultimately when calculating your tax, it still goes in there as a tax reducer, just goes on a bit differently than it does as a business expense.
So in capital allowances, essentially, if you buy something small, like, I don't know, a box of pens, you can put those all in one year. So they're quite small. Whereas if it's a laptop, they split it over a couple of different years, isn't it?
Yeah. So because it has a longer useful life in a way, so it's just kind of dealt differently, but you'll still get a tax reducer on it. So just be mindful to keep receipts of any larger purchase, not just the small ones.
Okay.
And then the pre-trading expenses. Now, a lot of people don't be aware of this, but you can have, if you maybe are building up to start the trade. So maybe if you decided to start to run your business and you go out and buy a laptop for that business, but you haven't started to trade yet. Once you start to trade, any expenses that you have paid in that previous 7 years before trading, then you can still claim those when you begin to trade. So it's just good to keep receipts of everything if you have the goal to start trading soon, because anything you spent in that previous 7 years can be put in there to reduce your tax ultimately.
Okay, that's good. Yeah.
Now, the most common ones, this is ones you're probably going to see pretty often, and ones that you probably you're purchasing quite a lot through your business. These are the most common ones. Now, the list it's not exhaustive. There will be others, but these are the most ones you'll see regularly. And the example there you'll see is that if your business is earning 20,000 in a tax year, but you have allowable expenses of 5,000, then you're only going to be paying tax on that 15,000. Not on the actual amount that you earn. It's going to be your income minus your allowable expenses, and then you're taxed on that figure. So there's three separate expenses can be broken down into three headings. You have your office expenses, business premises, and other. So office expenses, kind of the daily things, your phone and internet costs, any postage if you're posting anything to clients that are purchasing stuff online, any stationery costs, any printing costs, and any software that you're using to sell your product. They're all allowable expenses. The business premises, so if you have an office and you're renting it, that's going to be an allowable expense in your accounts. If there's any maintenance and repair that has to be done, that will be an allowable expense. And then the others, rates, utility bill, and any insurances that you have. The others then, you have travel costs such as your fuel, insurance, repairs, servicing, any stock that you're buying, any materials that you're buying, and then any legal and financial costs. And accountancy fees are also included in there also as an allowable expense. And now you see a lot of everything is done online, social media in particular. We've seen a massive surge in online e-commerce businesses selling everything online, but there's not a lot of them that know that any expenses they're paying to maybe advertise their work or to put out advertisements on Facebook or Instagram. They cost money ultimately, but they will be an allowable expense in your accounts if you just keep track of what that spend does.
Yeah, and I suppose it's going to depend on what business or what sector of the industry you're in, what kind of what you'll be able to claim. So it's kind of the benefit of if you're unsure, you can always contact your accountant and check, am I allowed to claim this, which kind of feeds in quite nicely. So we've our first question, which is what if I use my personal car for business use? So how does that work?
Yeah, well, you see this quite a lot as well. People are using their own car or van for that matter, if it's a van for business purposes, but they might not know what exactly to claim for it. The amount that you can claim, it kind of depends on whether, if you're self-employed, if you're a limited company, it's slightly different. But the amount that you can claim depends on how much you actually travel for business. So if you're self-employed, then you can use what's called the flat rate for mileage, it's known as simplified expenses. And there's specific amounts that you can claim, and it's based on how many miles you travel for business reasons. But for example, if you use your car, HMRC state that you can claim 45p per mile for the first 10,000 miles. And then after this, it's 25p per mile. The same applies if you're using a van, but it's a bit different than if you're getting into electric cars and hybrids and stuff. It's a bit cheaper. You're probably paying about 4p per mile, I think, on that.
Yep.
But it'll just be a matter of trying to record exactly what. Now, I know it can be time consuming to say, oh, how many miles did I actually travel today for business reasons? But if you just kind of keep a track of whatever diesel and stuff that you're putting into your car, whatever traveling you're doing, if you just kind of keep a log of it, and then maybe towards the end of the year, then we'll have a cleaner idea as to how much miles you can actually claim. But if you just do the calculator, it's pretty simple by keeping track of it, even if it is on your own Excel spreadsheet, or if it is on a journal or whatever it is that you're actually keeping track of it. As long as you have a record of it, and then it'll go on as an expense.
And just to highlight, that's obviously using your own personal car. That's not actually a company giving you a car, which is a totally different thing. But
yeah,
I think that's too much to go into for today. But basically, it is possible to use your own personal car. But there are people who get company cars or use the company's purchase of cars, which is also possible. But it's quite a different thing, isn't it?
Yeah, it's different. I mean, if you have a car that's specifically for a commercial car, so if it's specifically for the business, then you can claim a lot more expenses. You can claim the repairs and maintenance, service costs, MOT, stuff like that for that vehicle. Whereas you're self-employed, it's a bit different. If it's personal and business related, you can only claim for the actual business element.
Okay. Just the next one quickly before we move to the next slide. So we've been trading for 2 years and we weren't sure about the 7 years thing. Is it too late to claim this? So I suppose that's actually quite straightforward.
No. What was the question again, Michael? They've been trading for
2 years, and I think they had pre-trading expenses. So is it too late to claim this?
No, well, look, if you can get a copy of them, you can still claim back that 7 years for pre-trading expenses. So yeah, just as long as you're able to get a record of them. So if you can go back and filter back through receipts or whatever it is that you have for it, then it might be possible to put them on if you're 2 years of trading. Yeah.
Yeah, I suppose on that one, we'd be best to kind of just if you give us if you want to can I book a consultation with us, we can go through exactly what you're looking to do and kind of advise you from there. So
yeah, depending on what the purchases were, if it was assets and stuff like that as well, you'll have to look into it a bit further.
Yeah. Okay, we'll move on. So
the previous slide touched on the majority of stuff for self-employed individuals. Now this one, it's for limited companies. Largely they're the same in that You have your office costs, everything else in terms of rent. The difference will be in terms of salaries and dividends. Now, as a limited company, if you're a director of that limited company, you can choose to pay yourself a salary and a dividend. In order to be, the salary element will be able to go into your accounts as an allowable expense and reduce your tax, but any amount that you're actually receiving as a dividend is not allowable for tax reasons. So, just to be mindful of that. And then the other cost, the cost of forming a limited company, you have to go through fill out forms with HMRC. It's relatively cheap, but there is a small cost to it, but you can still claim it once you've actually set up and registered as a limited company. And then everything else, pretty similar: legal costs, advertising and marketing costs, and the office cost will all fall in line to what we touched on there before in terms of the self-employed individual.
Well, that's it's a good point. I mean, if you've gone through costs of forming your company and things like that, it's probably one of the ones that quite a few people forget about. So you might as well take advantage of it while it's there.
Yeah.
Just another question before you move on. So I run my business from home. Are there any costs that I can claim as a business expense?
Yes, but again, you have to be careful as to how it's actually done. There's a couple of ways again, and it will depend on, are you a sole trade from home or are you a limited company from home? But you will be able to claim. So if, like the QR element, if you're a sole trader, there's the simplified method is probably the best option. And there's a flat rate method, and it depends on how many hours you're actually working from home in that month.
Yeah.
That you can actually claim. So I think if you're up to 50 hours a month, then you can claim £100. And if it's over that, it's £18 a month, I think. And then it's over that, I think it's £25 or £26 a month. But just be careful on that, because I think from that method, you're only allowed to cover the costs for your heat, your light, and electricity, I think, or in terms of claiming that cost. But if you're a limited company, then you can work it out a bit differently, and it kind of depends on, one, what type of business you're running and what work you actually do from home. So you'll have to split that amount into your use for the business and then the amount for personal. So it gets kind of technical and you kind of have to work things out. But just say you have a house of 5 rooms, but one of those rooms is strictly for business purposes. Then if you add up the costs for the total house and kind of apportion the costs to that one room, then that's the amount that you could potentially claim from working from home. You can have, if you're paying a mortgage, you can claim for a cost of that, but it's only the interest part of the mortgage.
Yeah.
You can't claim for any of the capital amount. So the same, your light and heat, broadband, and any repairs, as long as it's applicable to that room. So if you're preparing or repairing anything in that room that you're working from, then you can claim it fully. If not, you'll have to apportion it again if it's something to do with the whole house.
Yeah, so there's a calculation to work it out. So essentially, you can put part of your let's say your council tax, your mortgage interest, your electricity, your light, all that sort of stuff, and that can reduce your overall tax bill. I think that somebody has asked, so if working from home permanently, so I work permanently from a home office and limited company, what utilities can I claim? I think we've kind of just touched on that. So if you have any other questions or anything.
Yeah, like I said, with that one, like I said, in terms of utilities, it's going to depend on what you're actually working as. So if you're baking or something from home, then there's probably a lot of other things that you can claim in terms of cooking utensils, stuff like that. But if it's just kind of every other cost, then you have to look into it a bit deeper. But it depends on what you're actually doing from home before you'll be able to determine that.
Just, I'm kind of conscious of time, but we'll go for one more and then we'll move on. So, so somebody's asked, is it efficient to buy an electric car through a limited company, and how does it work technically? So the short answer to that is yes, it can be very efficient to buy an electric car. It's certainly much better than buying, say, if somebody's purchasing, I don't know, a diesel Range Rover or something like that. The tax that you would pay on that, the benefit in kind, it's called, that you would pay on a Range Rover can be sizable. If it's an electric car and it's qualifying, it depends, it can't be certain types of hybrids and things like that. But if it's, say it's full electric, like a Tesla or any of those kind of e-trons, then they have quite a low rate of BIC on them, so they can be very, very good and very attractive to directors. So certainly one to think about if you've surplus money in the business and things like that. But again, it really depends on your circumstances. So likewise with the utilities, like Stephen was saying, these things are all possible, and what you're kind of best to do is consult and make sure that you're right with it. But certainly all of this is possible. Okay, we'll move on, Stephen, if that's all right.
Yep, well, actually.
Okay.
I just want to be pretty quick now. This is some of the examples of the expenses that are not allowable. So disallowable expenses. So although they can still be expensed through your business, they're not going to be allowable for tax reasons. And I touched on the dividend area before there. So you can take a salary and it will be allowable, but any dividends is not going to be allowable. And the others, in terms of entertaining clients, if there's any fines, things like if you're traveling for work and you end up getting a speeding ticket or something for whatever reason, or a parking ticket, things like that. And the asset depreciation, that's going to fall in. If you're buying a vehicle, because it's over a number of years, then that's depreciated over that number of years. The depreciation element is not going to be allowable for tax reasons either. And then gifts to clients and any donations are also disallowable.
Okay, fairly straightforward in that one.
Yeah. And how to claim them now, pretty straightforward. If you have a limited company, then just purchasing them through your business bank account is one way to let HMRC know what the expense is, but also let you keep track of what that expense actually is. So you can claim it no matter how small the expense is. If it's going through a business bank account, then it can be claimed as an expense as long as it's allowable. And in another way, if you have an employee and maybe they're paying for things personally, but they are for the business, then as long as they're fully for the business, then that employee will have to submit an expense claim, outline what those expenses are. If they're fully business related, then they can go into your accounts as a business expense, but you'll have to set something up for the employee expenses so that it's managed effectively. Not just and maybe setting an employee a budget a month as to what they can actually spend. Things like that allows you to keep track of it rather than just kind of saying there's the card and kind of work away with whatever you want. As long as you set a budget, then you have a fair idea as to what's actually going out every month.
I think you might have other problems if you let them. But yeah, so it is important just the rules and procedures around that, so that they file the receipts and things like that. It's generally good practice to keep you right, so you know what they're spending. So just I'll just touch on this bit, and then we'll kind of look to wrap it up as quickly as we can, because we are conscious of your time, and we are conscious that the weather's quite good and some of you may want to enjoy the rest of the evening. So basically just a few tips on how to kind of record and keep track of your expenses, so that you know exactly how much you're spending every day. So to help you stick to a budget, to make sure that you're paying the correct amount of tax, and then it helps you create kind of accurate reports and things like that, so that you're actually you know what you're spending, as opposed to kind of coming to the end of the year and that you arrive and I didn't know we spent that amount on whatever.
And even the correct amount of tax is pretty important there. We see people and no matter how small the expense, I mean, if a lot of people maybe go through the year and think, look, I'll not bother with a receipt or anything, I'll not keep track of it. But we see it where if over a course of a year, they can all add up and they can all potentially reduce your tax massively. So no matter how small it is, keep track of it. And because it could be a couple of £100 a year in savings that you're missing out on if you don't have a correct way to keep track of it.
Better being in your pocket than HMRC's.
Exactly.
And just in terms of kind of, I suppose there are so many easier ways to do this now. It's kind of the days of having to kind of keep stacks of receipts and hand them over to your accountant, thankfully we're kind of moving away from that. I'm not sure how fast we're moving away from it, but basically a few things to help with that. Like Stephen was saying there, a business bank account, keep everything separate. If you're trying to go through your personal bank account and separate out what was and what wasn't business and all that, it would become so difficult. If you have a business account that you just use for your business, it'll make it much more straightforward. The other thing is if you invest in some sort of accounting software, there are a number of different kind of software to keep track of expenses. We find that Dext is one of the best ones. It can be as simple as taking a picture on your smartphone. That'll automatically keep track of it for you. It'll put it into, things if you attach it to Xero or with whatever package that you may use. And you can integrate it just with, like Facebook ads, like Stephen said, that'll automatically take those bills in so that you don't miss anything. And that's the thing, is that these software packages make your life just that bit easier. And that you don't have to kind of look for it towards the 31st of January that everybody dreads or whatever, and kind of going, right, where's that receipt, where's this receipt, where's that receipt, so it's good from that point of view. But it is always important that even though these Dext and things like that are cloud based, it's just good practice to keep a backup so that if you ever need it, that it's there. Something happens, your password or your
they do be stored in the software anyway, and they're pretty secure. It's an online website and stuff that everything's kind of stored into in their own cloud. So the chances of anything actually happening to those are pretty slim once you take a picture of it. It's pretty secure. It's all above board. So, but like Michael said, it's always just still good to maintain a backup of it of some kind. Now, we're not saying hard copies. Obviously not. We're trying to get away from the hard copy and keeping your shoebox at home, but.
Yeah, no, it's just in case you need it. You never know when you might need it. So with that, I think we've just time for one last question. If that's okay, Stephen, we're kind of just running close to time, but can my mobile phone contract be a business expense? Is that fairly straightforward?
Yeah, well, again, it depends on really if you're a limited company or a sole trader. If you're a sole trader and using your personal phone, then only the business element can be claimed. Now, it might have to be where you're having to sift through, okay, what call, but no, it can be pretty technical. Oh, okay, what call was business related to? But if you keep track of it, and fine. But if you're a limited company, then it depends on the type of contract you have. So if you're taking that contract out in the name of the limited company and it's registered in that name, then you can claim all the costs for it. But if it's in your personal name, then there's just a couple of ways that you can treat it. And if it's, if the company pays it for you, stuff like that, then what's it treated as a benefit in kind. But there's kind of different tax areas then that you're going into. But for both of them, you can claim it. It's just a matter of keeping track of what's actually business related, or if the phone is actually registered in the company's name, then you can claim the lot.
Yeah, excellent. Okay. Listen, everybody, thank you very much for attending the webinar. Hope you find that useful. If you have any follow-up questions, feel free to drop us an email. You'll see there's our email address there, accounts@toast.tax. We'll pick those up. If you want to follow us on social media, we'd be delighted. So all the links will be there. And obviously, if you want to book a consultation or anything like that, again, they're free of charge. We'll have no problem just kind of reviewing and seeing how we can help out. And it might be, just the best thing that you do. So with that, we'll finish up there. Just a reminder, we will be sending out a copy of the slides and a recording if you want to watch it back. But thank you very much for your time, everybody.
Thanks, everyone.
Thank you, now.